Yeah, good morning, everyone. So yesterday we saw some corrections in the US market, mainly driven by a decline in the Nasdaq or IT stocks. Nvidia came off by around 6%, mainly driven by the bond yield increase which has happened over there. That was driven by the strong economic data. So strong economic data is leading to the expectations that the interest rate cut will be discontinued earlier than expected, and that has uh, impacted the US market yesterday. Futures are positive. Asian markets are also taking clue from US and are mostly down. In most of the Asian markets are indicating lower trend in today's morning trade. Uh, Taking sentiment from the international market, as Indian market are comparatively weaker, will follow the international market on the downside and may see some corrections in today's trade. Uh, Commodities are seeing some positive trend wherein oil is up by around $1 and aluminum is up by around 0.5, copper is flat, whereas iron ore and steel are down by around 0.5%. So now I'll request technical team to take up from here.
Yeah, thank you, sir. See, on the derivative front, the overall data is a little weak, as we did say in the past week as well. Um, the VIX, however, continues to remain around that 50 odd levels. It has not increased much, but it's not coming down as well. PCR below the one levels, still negative, and open interest has risen. That means some shorts have been built in. Uh, so yeah, all in all, this is a mixed bag at this point of time. Um, the good thing is that there is good support around 23,500 levels. So likely support, the nearest support for Nifty is going to be around this 23,500 levels. Once Nifty comes there, we can see some support buying coming in for Nifty. On the resistance front, 24,000 holds the highest put call base for Nifty, and that also is now your resistance zone. So that is an important level where if once crossed above, you will see some buying coming in again. But until then, you will continue to see the pressure for Nifty. From the stock specific front, oil and gas stocks have made a good comeback, and some important shorts have been covered in ONGC and Oil India especially. So they are likely to move up from current levels. Also, certain pharma stocks, pharma has been performing quite well, and certain pharma stocks like Biocon, which witnessed short covering action in the last week, have now started to build long. So likely that these two sectors will move up from current levels. Both are a bit defensive at this point of time. Yeah, so look out for the same. So that's it from my side. Like to ask the fundamental team, Swati, to take it up from the technical front.
Thank you, Nirav. Good morning, all of you. Today, the market is likely to open on a flattish note and we're likely to witness some range-bound trading sessions. Yesterday, we have seen that the Nifty somehow manages to maintain a very support levels of the upward sloping trend lines, which comes to it around 23,600 levels, and it has managed to maintain a closing about the same, which gives some sort of a relief sign on the technical front. Now going ahead, Nifty has immediate support level as 23,640. If it's break that level, then more selling pressure can be seen into the market, which might take a Nifty towards to 23,570 to 23,500 levels. Whereas on the higher side, the resistance is placed at around 23,770 and 23,840 levels. So those are the strong resistance levels we are looking for the Nifty. The overall view will remain cautious as long as Nifty trades below 23,800, 840 levels. If it's break that level, then only we can witness some sort of a fresh buying into the market. Till the time the market will remain a volatile in the coming few trading sessions. Coming towards the bank nifty, for today intraday purpose, the support is placed at around 50,200. Any move below that level, 50,000 can be tested on the downside, whereas the resistance is placed at around 50,740 and 51,000. Stock specific, Pidilite industry really looks good on the technical front. The technical charts looks very positive on the daily as well as on the weekly chart is well placed above the important moving average. We have already initiated this particular counter for a target of 3020. So one can take a long positions by keeping a stop loss of 2900 rupees for a target of 3020. Second counter on the buying side looks positive is on Tata Motors. This particular counter we have initiated for the 2025 as a stock picks. It's a highly beaten down stock, and from the 31st December we have initiated a buy call. And from there onwards, we have witnessed a very strong revival from the lower end, and the stock is really doing very well. So, those who are really interested for a long term horizon stocks to add into the portfolio, Tata Motor is really look good. For a short term purpose, for a 1 to 2 intraday sessions, we are looking for a target of 810 to 820. So, one can carry their long positions by maintaining a strict stop loss of 770. That's it from my end. I request fundamental team to take a call forward.
Good morning. Just an update on upcoming IT sector results. Third quarter results will be starting from tomorrow with TCS and Tata Elxsi declaring results tomorrow post market hours. On a quarter-on-quarter basis, most of the Indian IT firms would be showing a muted performance in this quarter, except for HCL Tech, Persistent, and Coforge. On a year-on-year basis, however, firms should show far better performance than last year because of lower furloughs during the quarter this year. EBIT margins will also be impacted for the same reason, as well as wage hikes by many firms. Globally, tech spending is expected to be better in calendar year 25. This we had already seen in Accenture's recently reported Q1 results as well, wherein the company had raised the guidance for the year and even increased the headcount as well. So, talking about TCS results for tomorrow, constant currency quarter on quarter revenue growth expectation is subdued at around 0.3%. EBIT margins are also expected to remain flattish at around 24.4%. Last quarter they were 24.1, and last year the EBIT margins were around were 25%. So the market will closely watch TCS outlook in the demand environment. Stock is available at a PE of 27 times FY26 expected earnings, and long-term outlook remains positive for TCS. In near term, one should be cautious and take direction from management commentary post the results. Any positive surprises in the results should see positive impact on the stock in the medium term. Also, Tata Elxsi would be reporting its numbers tomorrow. So revenues are expected to remain flattish at rupees 953 crores. EBIT margins are also expected to remain flattish at around 25.1% quarter on quarter. Market would be watching for its automotive and transportation business performance. Tata Elxsi stock is available at 40 times FY26 expected earnings, and long-term outlook remains positive for the stock. Thank you.
Good morning. Tata Steel Limited posted its quarterly volume update. Tata Steel India delivery volumes for quarter 3 came at 5.29 million tons, which was 8% up year on year and 4% up quarter on quarter, aided by steady sales in domestic market and strategic presence in the exports. Tata Steel Netherlands delivery volumes came at 1.53 million tons, which was 2% year on year and 17% quarter on quarter. Tata Steel UK and Thailand delivery volumes came at 0.84 million tons, which has decreased by 7.7% year on year and 5.6% quarter on quarter. We are neutral about the stock. Thank you.
Yeah, the UP, one of the agriculture minister in the UP government has said that they may be increasing the prices of sugarcane, that is SAP may be increased. If suppose that happens, then it will act as negative for sugar mills because the wide expected increase in support price of sugar and also the increase in ethanol price has not yet come. And anyhow, currently their margins are squeezed, and if the sugarcane price further increase, then that will have a further negative impact on the sugar companies. So that can act as negative for the sugar companies operating in the UP market. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might witness gold testing 77,700, 77,900 on upside. So buying around 77,400 is recommended with a stop loss of 77,100. Silver, one can buy around 90,500 with a stop loss of 89,700. On upside against 91,500, 92,000 is the target we are eyeing for. Copper, one can buy around 814 with a stop loss of 809. On upside, we are expecting 820, 824. And zinc, one can also buy around 274 with a stop loss of 272. On upside, 277, 278 is the target we are aiming for. Whereas in crude oil, prices recovered from the lows of 63 6370. So one can initiate a buy around 6350 with a stop loss of 6280 for the target around 6450, 6500. Whereas natural gas, we are expecting prices to correct till 290, 285. So one can sell around 305 with a stop loss of 318. That's it from us. Thank you very much.